Good to see you. Almost didn't recognize you, not being in front of the White House long.
It's great to be here in person.
Welcome to New York.
Thank you.
So what do you make of some of these warnings from corporate America, especially Ford right now, which is getting shellacked on an extra $1 billion of costs related to the supply chain, which we thought was improving?
Yeah. Well, look, these individual company announcements obviously are affected by individual circumstances. So we obviously look closely at them, but try to take a broader perspective. I think what we're seeing and what I'm hearing today and elsewhere from business leaders is that we continue to see a surprising degree of resilience in the economy. Resilience on the consumer side. There's certainly changes in the composition of spending, but there is real, resilience there. And resilience on the business side as well, and capital investment continues to move forward. There's no doubt we're in a transition, and that transition is catching some companies and creating opportunities for others. So no doubt we're in a transition, and there are uncertainties, but I also think that we're hearing a lot about companies being able to have some certainty now to invest for the longer term. In areas like clean energy, in areas like semiconductors, because of the policy certainty that we've helped to create. And so I think that will be helpful over the medium term, even as we navigate through, the real uncertainty that is here in the medium term.
We were hearing a lot about resiliency, too, and then that's why some of this news was so shocking, like FedEx coming out, lowering its guidance, the CEO saying we're going into a global recession and that the U.S. consumer is starting to feel the pain as well. In other words, it does make you, FedEx is as broad as it gets. It's not industry specific. They touch shipping around the world in real-time data. It makes you wonder whether we're going into a recession or a downturn even faster than the market was expecting and that you're expecting.
Well, let me take that in a couple of pieces. Number one, there is uncertainty, and we should be humble about that. Number two, where we sit today in the macro economy, if we look starting in the U.S. economy, we continue to have a very historically strong job market. Consumers do continue to spend, and again, the compositional elements do affect different companies differently. Number three, the global environment is very challenging right now, and certainly Europe is facing challenges, China is facing challenges. I think what that reinforces, though, at least in what we're hearing and seeing, is just how uniquely well-positioned the United States is to navigate through this challenging short-term period. And the last thing I'll say is, look, individual companies have made decisions over the course of the last several months to navigate through this transition in different ways. So they're going to find themselves differently positioned. But one thing that I am hearing consistently is that now, if you look beyond the near-term period, the incentive, the opportunity to invest in the United States, to build in the United States, to take advantage of the resilience that comes from a more resilient supply chain, to build on the manufacturing progress that we've seen in the United States, looks more promising than it has in years. So
that's going to take years, though. Chip manufacturing in this country, how long? When is that going to happen, realistically?
Well, the good news about the way that we have structured the policy incentives is that they provide long-term certainty that actually pulls forward private investment. So certainly it will take some time to build fully out a fab to full operating capacity. The kind of forward investment will start immediately. We've seen that in a number of company announcements. We see that in other sectors like electric vehicle charging infrastructure, manufacturing that's happening here in the United States because of requirements that those are made here in the United States. That happens immediately, even as public funding is going out across time, because now companies finally have the certainty to know the United States is in this for 10 years or longer.